You are listening to The Vocal Technologist. Spoken tech for your ears.
Welcome back. We're digging into some recent shifts in finance and fintech today.
Yeah, there's a lot happening.
Our aim is to pull out the key insights for you so you're up to speed on how we're paying, banking, all that stuff.
Exactly. It's a really dynamic time. We've got everything from new ways to pay to some pretty big regulatory moves.
Right.
And it might seem like separate things, but they're all kind of connected, shaping the whole financial picture.
Okay, let's unpack some of that. Starting with payments, maybe. Apple's been busy expanding tap to pay on iPhone.
Oh, yeah. That's rolled out quite a bit more in Europe now.
Yeah, 8 more countries.
Yeah.
Germany, Italy, the Netherlands are on the list. And the big thing is merchants can just use their iPhones. No extra hardware needed.
Right, which is huge. They're working with Adyen, Revolut, Stripe, the usual big players.
Makes it much simpler.
It really does. And what's interesting is Adyen is also pushing this independently. They've enabled it in 7 other European markets, too.
Wow.
So the adoption is happening fast. It's this move away from needing specific payment terminals. Makes it easier for smaller businesses.
Definitely democratizes it a bit.
Yeah.
And speaking of different payment types, Block is making a significant move too, right? With Bitcoin.
Yeah, they're enabling Bitcoin payments across their Square point-of-sale systems.
How does that actually work for the customer?
You basically scan a QR code. It uses the Lightning Network, which is designed for faster, cheaper Bitcoin transactions.
Okay, essential for retail then.
Exactly. They're saying full availability by 2026, but, pending regulatory stuff, it fits into their bigger Bitcoin strategy.
Right. And then there's Visa, looking even further ahead.
Oh, yeah. Their top priority sounds almost sci-fi, enabling AI agents to make purchases for you autonomously.
How? How would that work?
Well, the idea is these AI agents use pre-authorized tokens. Think of them like digital permissions. They handle the transaction so you don't even go through a checkout.
So payments become kind of invisible.
Pretty much. Faster, seamless. Imagine your AI just handling subscriptions or reordering things without you lifting a finger. That's the vision.
Interesting. And sticking with seamless payments, there's also Tink, Adyen, and Vodafone in Germany.
Right. They've teamed up so Vodafone customers can use Pay by Bank, direct bank-to-bank payments for their phone bills, prepaid or postpaid.
Cutting out the middleman.
Exactly.
Okay, so lots happening in payments. What about the banking side, like neobanks?
Yeah, that space is fascinating. You've got Nubank leading in sheer customer number, 114 million. Huge.
Wow.
But then Cash App brings in the most revenue, $16.2 billion.
Different metrics tell different stories.
Totally. And Revolut is scaling like crazy. 50 million users, $4 billion in revenue. So they're all growing, but in, quite different ways.
And then there's movement in the crypto infrastructure space, too. Circle's IPO plans.
Right, the stablecoin issuer. They're aiming for an IPO, looking to sell shares, maybe up to $624 million worth.
What's the potential valuation looking like?
Around $5 billion, maybe, which is quite a bit less than that $9 billion SPAC deal they had planned before, which fell through.
Ah, okay. But still shows interest in regulated crypto players.
Definitely. And, the traditional banks, their view seems to be less about stablecoins replacing them.
Right.
And more about integrating them, like treating stablecoins as just another payment rail within their existing secure systems. Absorption, not replacement.
Makes sense, like adding another pipe to the plumbing.
Pretty much.
Now, what about smaller traditional players? Community banks, credit unions. Can they compete, especially in small business lending?
Well, they've struggled against faster online lenders, but the key might be open banking and cash flow underwriting.
Explain that a bit more.
Instead of just relying on old credit scores, they can use open banking to see a business's actual real-time bank data, their cash flow, assess risk much faster, make quicker decisions.
Leveling the playing field a bit using better data.
Potentially, yeah. But even as all this innovation happens, regulators are watching closely.
Like the EU looking at Visa and MasterCard fees.
Exactly. That's reportedly happening. Could turn into a formal investigation, which might shake things up.
And on the flip side, companies are fighting fraud. Apple stopped, over $2 billion in dodgy transactions last year?
Yeah. On the App Store alone in 2024 shows the scale of the problem and how platforms see themselves as gatekeepers.
It was a constant battle.
For sure. And speaking of regulation and data, there's some uncertainty around open banking in the U.S. too, right? The CFPB.
Rule 1033, yeah.
They might rescind it, which could really change how financial data gets shared. It's a big question mark right now.
Meanwhile, the big banks are reorganizing too. JP Morgan Chase merging his wealth units.
Right, putting U.S. and international wealth management under one leader, Kristen Lemkow,
Okay.
trying to unify strategy, find more growth. Standard big bank move, really.
And underpinning a lot of this change is AI, isn't it? Even in areas like accounting.
Absolutely. AI is automating tasks, integrating with ERP systems, improving audits, giving CFOs real-time data. Accounting's complex, but it's actually really well suited for AI applications.
So quite a whirlwind of activity across the board then.
Definitely. A lot of moving parts. Which kind of makes you wonder, with all these changes, AI making payments invisible, stablecoins maybe fitting into the banking system, open banking changing data access, and this constant fight against fraud, what completely new roles could technology take on in our financial lives soon? Things we haven't even thought of yet.
You've been listening to The Vocal Technologist. Tune in next time.